Welcome back to the Crypto's Key Conversation. In this video, we're going to take a look at a couple things here. We're going to take a look at John E. Deaton's tweet right here, talking about the SEC versus Ripple stuff. We're going to look at this article back in February where it says Apple to enable crypto payments at the end of the year. We're going to look at the EU Parliament vote to impose KYC. Looking at some updates on Binance and their partnership with the Grammys, some CNBC stock market updates, and then we're going to go into this video that was posted by Digital Asset Investor that I think kind of sheds a light and kind of paints a picture of kind of what's going on, and I think it's pretty insightful. So coming over here, as you can see, we just recently had a drop within the past 24 hours, real recently. So if I come in here and look at Bitcoin here, as it loads up here. So as you can see, just this morning, we're at 47,000, almost 500. And now we're down here testing that support that we talked about. If we're looking at the 7-day chart, which was our resistance, 45,000 was one of our main resistances. Now it looks like we're coming to retest it to see if we can hold the strength as support. So formerly known resistance to flip it to see if it's support. So got a little retest there. So now we're seeing a little bit of, red in the market, and it's not everything, but most of them. I mean, even XRP was recently at what 86 cents. Let me see where they have it at this morning. Yeah, 86, almost 87, and it went all the way down to about 80 cents. So obviously we're seeing some sort of cooling off after this pump that we've had. And as you can see, looking at the Bitcoin Fear and Greed Index, we're in this neutral range again. So just yesterday we were in the greed at 55. Now we're hovering in the neutral range. So obviously just a little bit of cooling off. Nothing to be too fearful about. Just kind of normal ebbs and flows in the market, which is per technical analysis and just time in the market. It's healthy movements. Coming over here, Johnny Deaton has this tweet that I wanted to cover, and it says, when the SEC filed the case against Ripple, I argue that exchanges should not delist XRP. I argue this because I read the complaint and realized the SEC was alleging today's XRP a security and that many of the allegations equally apply to all tokens. It's a dangerous complaint. Then he comes out here and he says, my hope was for all the exchanges to continue to list XRP, join together and hire a law firm to file an amicus brief. Respected leaders like, let me go ahead and highlight this so you can see, like Jesse Powell referenced Ripple burning too many bridges for that to happen. Regardless of the reasons, justified or not, it did not happen. When Brian Armstrong disclosed the SEC intended to sue Coinbase over the Lend product and that Gary Gensler refused to meet with any crypto companies, argued the best next move was to relist XRP and ask to file an amicus brief, selling XRP provided standing. He says, finally, I've argued that the entities that have been denied a spot Bitcoin ETF should sue the SEC. Former commissioner and Stanford law professor Joseph Grunfest has himself questioned why such a suit has yet to be brought. I mean, I have that same question too. We've been talking about a Bitcoin spot ETF for years now. Coming over here, he ends and says, Gary Gensler and the SEC have engaged in war versus crypto. I have no doubt an exchange will be sued before the end of the summer. The SEC will claim the exchange is selling unregistered securities, although it won't provide guidance on which tokens are securities. Wake up and fight. Pretty powerful, tweet right here, and obviously he's referencing, the Ripple versus SC case and how he viewed, when the case was filed against Ripple, it wasn't just about Ripple and XRP, it was about the entire industry, and he's talking about applied to all tokens and how it can affect the entire space, as we've seen just in the past videos. That just yesterday I posted a video talking about how they're going after Voyager and their yield bearing accounts, that their customers earning interest on staking their assets within their platform. They're going after all these exchanges, all these platforms, and digital assets aren't safe. So this Ripple versus SC case goes south and the SC wins and they gain more power. They're just going to have more power to overstep and overreach and overregulate by enforcement this industry, which can't happen. So continuing on here, Johnny Deaton says, thousands of U.S. holders have their retirement frozen because they can't convert their XRP to USD or Bitcoin or gold. If they experience a life-altering event, for example, disability, death, life care for a loved one, they can't access funds because the SEC grossly overboard arguments. Shame. So if you have like those accounts like I Trust Capital, I think there's been conversations about people who have XRP in iTrust, those are frozen, so they can't access those. That's just one example, but it's a true cause of concern. I know for me in particular, I mean, I have a hard wallet and online digital wallets that I utilize for my assets. But it's like people that don't have access to their stuff that may need that stuff, especially in these times now. Inflation going crazy. Everything's more expensive. Gas prices are crazy. People need access to their money, and it's crazy that how much the SEC has affected the citizens that they're set out to protect. How much they've just affected them just with this case alone. It's crazy. So just kind of shifting out of the SEC versus Ripple stuff, we're coming to come over here. So this was an article by Yahoo. This was back in February 9th, 2022. But the conversation has been brought up again today. It's talking about Apple to enable crypto payments with tap to pay by the end of 2022. So there's been speculations about, Apple partnerships and Apple purchasing and buying into the crypto space and yada, yada, yada. I don't think there has been anything officially released, but it has been brought out that, they are trying to enable these, in a sense, peer-to-peer functions within, iPhones and all that stuff to where, you can, send and receive, payments, just like all the other apps that we utilize throughout our everydays, Cash App, and all the other ones. But I just kind of wanted to bring this up just to kind of, give you some food for thought. And as we get more, adoption and awareness, and there's more legitimacy when it comes to, regulatory clarity within the space, we're going to see, more major companies and corporations like Apple really jump into the space and really start adopting and literally utilizing, this technology within their own, technologies, which is massive. Here goes something from EU Parliament votes to impose KYC on private crypto wallets. So in our past videos, we were talking about how, certain, I think it was like Japan and other, different geographical locations, if you were a citizen within that area, they required that you had to, prove some sort of information whenever you were sending and receiving a certain amount of money or digital assets. So it says European Union lawmakers have voted to crack down on so-called unhosted crypto wallets. That's quite interesting. Coming down here, I'm just going to scroll down. You can read this article if you like, but this is from Brian Armstrong, where they're referencing what he was saying here. It says, this means before you can send and receive crypto from a self-hosted wallet, Coinbase will be required to collect, store, and verify information on the other party, which is not our customer, before the transfer is allowed. Moreover, anytime you receive 1,000 euros or more in crypto from a self-hosted wallet, Coinbase will be required to report you to the authorities. This applies to even if there's no indication of suspicious activity. So I'm quite interested to see kind of where this goes. Quite honestly, it's crazy. It's crazy that it truly almost seems like just another tactic for control, and that's the sickening part of it. The whole, for me in particular, I have to, collect and get someone else's information. If I would, like, say I was in, Europe, and I have to, get a certain amount of information from a person I want to see, send money to, whether it be for a service or not, or just, just supporting a cause or whatever the case is. That's kind of crazy. I mean, how am I supposed to receive that information? Like, what if they didn't want to give it to me? Then what does that mean? But anyways, it's just like an overreaching tactic, and it's kind of almost an invasion of kind of privacy in a sense, which is wild to me. And I know there's a lot of, bad actors out there that do, dangerous or negative things in regards of, trying to, get around laws and be sneaky about, sending and receiving certain amount of, money or income to do devious or negative things. I get all that stuff, but it's like, you're really going to throw this at everybody, and this probably can't even be it probably can't even be possible for people, like I said, just to get information. Say you pay for a service, like what if that person doesn't give you that information? Like, what do you do? What does that mean? How are you affected by it? Yeah, it's crazy. This is just another tactic to to control, more control, and lack of privacy when it comes to what you do with your money. And keep in mind, it's blockchain technology. Everything can truly be seen. So it's like you have to know the specifics. Really, KYC is your route, is your approach. It's crazy. Coming over here, Cointelegraph. Binance becomes official crypto exchange partner of 64th Grammy Awards. Taking place on April 3rd, the 64th Grammy Awards ceremony will also feature exclusive NFTs via the One Of marketplace issued on Tezos. So, more eyes, more awareness. Obviously, Binance, massive within the space in every way. They have their own blockchain, their own exchange, trying to getting into a whole bunch of different things, education and everything. It's massive. So just more eyes, more awareness. I wanted to touch on kind of CNBC right now because obviously I just want you to look at, like, you can come to CNBC yourself and just take a look at like all the articles that's been coming out. If you look over like the past few months, a lot of negative narratives, a lot of scary tactics, and obviously there's been a lot going on, especially with Russian invasion of Ukraine, inflation and geopolitical issues around the world. There's been a lot of different things going on, and you even have stuff like the U.S. to release 1 million oil barrels per day to reserve to ease gas prices, and the sanctions and how they're so-called not they are affecting Putin and Russia, but then again Putin and Russia so-called has a way around it, and it's not, is it truly hurting and affecting Russian and Putin's ability to do business and so on. Like, there's so many different narratives going on that has been affecting the markets. Man, I just wanted to bring this up because Digital Asset Investor had posted this video when they were talking about how whenever you have a certain amount of we'll say for inflation, that we're going to talk about it. I'm not even going to talk about it. I'm just going to let the video kind of lay it out, because it's about 5 minutes, almost 6 minute video, and it's it's pretty in depth, and I think it's pretty important. But the overall concept is it almost seems like it truly aligns on what is going on right now, and that's the point I'm trying to make here. So he says, looks like Dr. I think it's Pippa Nose, daughter of Harold Malmgren, senior aide to Richard Nixon when he took us off the gold standard. Pay attention, folks. So let's just take a listen into this.
Is a game changer if national governments are going to get behind cryptocurrencies. Where does this take us?
Totally, and I think it's a massive market and geopolitical issue. I've written a little article about this, actually, which I put up on LinkedIn, where I said, you got to understand, if the size of your debt problem is so big that it can't be paid off, and in fact, even inflation, which is the usual way you would seek to default on your debt slowly over time, you can't get enough inflation generated.
Remember, the U.S. over $30 trillion in debt.
Then there is one further option, and that is you literally abandon the entire system of money and accounting. And I know that sounds unbelievably radical, but we've seen it happen before. And I explained the example of Britain in 1834, when they abandoned the traditional system they'd used for 1,000 years at that time, which was called the tally stick system. And so when we say we tally things up, or the word stock market refers to the use of little wooden stocks. There were literally pieces of wood on which you would record every transaction during your life, every borrowing, every lending deal, every asset acquisition, every tax payment. And so since that the way it worked was literally a wooden board. You cracked it in half really roughly, so the two sides definitely did match and couldn't be faked. And then the borrower and the lender each marked all their transactions. And the stock end was always the smaller end, right? So that's where we get stock market. There was a market in the stocks, these little wooden sticks. Anyway, bottom line was, why would you abandon a system that's worked perfectly beautifully for 1,000 years? And the answer is, you had 200 years of war debts that had accumulated. They were unable to get inflation up enough without causing social unrest. And so the government said, hey, let's actually take the tally sticks back and give people this great new innovation called paper money. Now, you can imagine, everybody's like, what, I'm going to hand over this record, this ledger of my entire net worth, and you're going to give me a piece of paper? Really? Like, this is a joke. So in the end, what the government had to do was actually confiscate the tally sticks, and they took them to Parliament to burn them. And they misjudged how much heat the fire would throw off, and that is what caused Parliament to burn to the ground in 1834, was the destruction of the system of accounting and money. And in its place, we adopted what we now use, which is a piece of paper we call cash. Now today, we're on the brink of a similar step change. And the way you'll do it is you're going to move to electronic money in conjunction with blockchain. Blockchain is the new ledger, and e-money is the new currency. The question is, whose e-money? So everybody in government circles have been watching the Indian experience, because the prime minister stepped up to the platform in early November and basically said, okay, we're going to move all of you, 1 billion people, off paper money and onto electronic money, and we're going to do it in 3 months. Well, they did it, and they did it successfully. And so now governments everywhere are saying, hey, we want to do that, because guess what happens when you move to e-money? First of all, you really eliminate the black market, because you can't transact anymore without it being seen. And so For example, the European Union are talking heavily about let's move to electronic money, because then all this black market activity that happens in Greece and Italy where there's no tax, we'll be able to get all that tax revenue off it. And so that's one reason. The second reason is with blockchain, you have total transparency over every single step of a transaction, complete provenance of every single transaction. Now, the question is, who gets to see it? And I think this is where governments are suddenly a little schizo, because on the one side, they think they are going to have the ability to see every transaction that you and I and all the listeners are engaged in. But Ethereum has created this platform where actually it won't necessarily be in government's hands. It may be in private hands. And the question is, can you trust the private hands who are issuing ethers as much or more or less than you trust governments? And so governments are beginning to say, well, let's create our own version. And that's where you get the PBOC saying, we got to control this, because otherwise you're going to end up with private sector currencies that possibly are trusted more than government currencies. And that will lead to transactions offline that governments can't see. So there was a report going around the internet recently about some guy made he made $200 million trading on Ethereum in a month. And the question is, well, who will tax that? And the answer is nobody. Well, that freaks governments out, to say the least, particularly given their debt situation. So I think this is a huge, huge thing, and all investors have to think very carefully about it. I'll say one last thing about it. You've got to get familiar with quantum computing. And there's loads of stuff on the net about it, but the reason that it matters is because of the speed at which you can process information. We now have quantum computers. The Chinese apparently have the fastest. There's D-Wave out of British Columbia. But basically, you can break a blockchain password or a Bitcoin password in like less than a minute if you have a quantum computer. So the question is, who's going to have them? And the answer is, mainly governments, but big corporations are buying them like crazy. Volkswagen just bought one. We're going to see major corporations buying that computing power. And the question then is, okay, who has most transparency over the blockchain and e-money? And I would argue it's going to be whoever has the most and fastest processing power, which may be governments at times, it may be private at times, it may be fluid. And that's what we have to think about as investors.
Is a game.
So I'll just, some food for thought there. I thought it was a great video that he had put up. Just kind of really had my mind going. And this was back in, what is this? In 2017. So let me know what you think about that. I thought it was pretty intriguing. But that's kind of my, my sentiment on kind of what's going on with the market right now. Clearly, we're still in the neutral range. So, not too negative, but, not so positive, just right there in the middle. So I'm interested to see, what the next, few weeks and months look like for our space. With all that being said, stay strong out there. Be safe.